Your accountant told you to set aside 30% of your rental income for taxes. They're wrong. Most investors treat the tax reserve like a mandatory savings account. But while your money is sitting there earning pennies, your growth is stalling. That tax money shouldn't be a reserve, it should be your next down payment. Look, we've analyzed portfolios generating millions in passive income. The wealthiest investors don't just manage their taxes, they eliminate them using the legal loopholes built into the tax code. Today, I'm revealing the two cheat codes used by the top 1%, the 1031 exchange and cost segregation. I'm going to show you exactly how to wipe out your taxable income and pivot those funds into more assets. By the end of this video, you'll know how to stop playing defense with the IRS and start building a truly tax-free portfolio. Most investors follow the same rule: set aside 30% of every rental check for the IRS. You think you're being responsible. You're protecting yourself from a surprise bill in April. But here is the cold, hard truth: that money is dead. It's sitting in a high-yield savings account, barely keeping up with inflation, doing absolutely nothing for your wealth. Let's talk about the opportunity cost. If you're hoarding $50,000, $100,000 just to pay the government, you aren't saving. You're stalling. You're essentially giving the IRS an interest-free loan while your growth plateaus. Every dollar sitting in a tax reserve is a dollar that isn't buying another door. It's a dollar that isn't compounding. While you're playing defense, the wealthiest investors are playing offense. They don't have a tax reserve because they've engineered their portfolios to have no taxable income. They aren't smarter than you and they aren't cheating. They just use a different playbook. If you keep following the save for taxes advice, you'll spend the next decade building a portfolio for the government, not for your family. You're working for the IRS. It's time to stop. Here is the truth: the goal isn't to save for taxes. The goal is to legally avoid paying them entirely. Most investors play defense. They wait until April to see how much the government takes. But the wealthy play offense. They use the tax code as a tool to accelerate their growth. Instead of letting 30% of your profit sit idle in a savings account, we're going to turn that money into your next down payment. Let's dive into the two most powerful strategies in the real estate playbook. Imagine you bought a rental 5 years ago. You sell it today and make a $200,000 profit. Normally, the IRS wants a massive cut of those capital gains. That's where most investors stop. But with a 1031 exchange, you don't cash out. You swap. You reinvest that entire profit into a larger, more productive property. The result: you defer 100% of the taxes. You're essentially getting an interest-free loan from the government to grow your empire. The pros call this swap till you drop. You keep exchanging properties for larger ones until you pass them to your heirs, who then get a step up in basis. The tax bill, it effectively vanishes. But what about the income you're making right now? This is the secret weapon. Normally, the IRS makes you depreciate a residential building over 27.5 years. It's a slow drip of tax breaks. Cost segregation changes the game. A specialist analyzes your property and breaks it down. They separate the structure from the components. Instead of 27 years, these components are depreciated over 5, 7, or 15 years. This creates a massive front-loaded deduction. You might show a paper loss of $50,000 on your taxes, even while your bank account is growing with thousands in actual cash flow. That is called a phantom loss. Your income is real, but your taxable income is zero. When you combine a 1031 exchange to grow your assets and cost segregation to wipe out your annual taxes, you've built a tax-free wealth engine. You stop being a taxpayer and start being a strategist. Now here is the reality. Most investors guess their numbers. Then they panic in April. Stop guessing. I use the analysis tools linked below to run these exact cost segregation projections before I even buy a property. It turns guesswork into mathematical certainty. If you're managing a high net worth portfolio, don't wing this. I've linked a professional accounting consultation service that specializes in 1031 exchanges to ensure you stay compliant. Imagine the difference. Instead of sending $50,000 to the IRS, that money becomes the down payment on your next duplex. That is how you build a tax-free empire. If you want more strategies to keep your wealth out of the government's pockets, hit that subscribe button. Grab the tools in the description, and I'll see you in the next video.